What's going on, folks? Welcome back to the Butcher of Wall Street. I have people wondering, at least some people, why are you guys still following AMC? Why are you still following GameStop? Reality is that anyone who's done even an iota of research on these stocks is well aware that what happened and has happened multiple times now since 2021 is going to happen again, including the chief executive officer, the CEO of Apex Clearing. Apex Clearing being one of the largest clearing firms in the world. Under oath, in front of the House Financial Services Committee in Congress, he was asked if he expects the situation with what happened with the restrictions and the buying button being taken away on companies like GameStop and AMC to happen again. And under oath to Congress, the CEO of Apex Clearing said, and so if the question is, do I think it's going to happen again? The answer is yes, for sure. No doubt about it. How it's going to manifest itself, I'm not sure. But for sure, it's going to happen again. That's a direct quote from Bill Capuzzi, the CEO of Apex Clearing, who said that during the investigation into GameStop and the situation with AMC and the other stocks that were made position close only by brokerages like Robinhood and Webull and all the 178 brokerages that removed the buy button on that date. So, folks, the reality of the matter is, first of all, I want to say welcome to everybody here. Thank you for being here. What's going on, Typo, Bilbo, Francine, ladies and gentlemen, welcome back. Zachary, my man. That's right, you can't buy FNGR or GNS stock on Fidelity. I know for Fidelity, you got to call in order to buy GNS stock, which is a little ridiculous, but that just goes to show a lot of the what we've seen here is pretty widespread in financial markets. And the situation with restrictions on trading has occurred time and time again and will likely occur time and time again. As a matter of fact, it absolutely will. Even the CEO of Apex Clearing has admitted that to everybody.
Bro, what happened? I was rich, but then my brokerage restricted trading and I lost it all.
It's time for change. Lit exchange. No dark pools, no restrictions, no bullshit.
Keep an eye out for Lit Exchange because things are about to change. I will tell you that much. We have some, as CEO Adam puts it, enormously good news for AMC stock. Just one moment. Today, AMC issued a press release with a major announcement that is one of the more important developments in AMC's effort to fight back from the ravages that the scamdemic prompted in 2020 and resulting in the aftermath since, both in the movie theater industry and our company specifically. Today, we announced that AMC has signed a collaborative agreement with some of our most key lenders. If consented to by our term loan lenders through a public consent process being launched today, it will do all of this. And I will explain it to you. I'm not going to read verbatim what Adam Aaron wrote here, but I'll explain it to you. They're offering $220 million in new capital via debt issuance. What's going on, James? Al, good to see you guys. $220 million in new capital via debt issuance. That means bringing more than $222 million into the company's treasury through the issuance of new debt. And what this means is that AMC plans to issue new debt, which will raise $220 million in cash. But it's not just sitting in the bank account. It is targeted specifically to refinance, meaning pay off or move along some of the debt coming due in 2026. This extends AMC's debt maturity timeline. It gives the company more breathing room. It helps avoid a liquidity crunch in 2026 by preemptively dealing with those obligations now. Securing this money shows that the lenders have extreme confidence that they're going to get their returns and they're going to get paid back. Investors wouldn't provide hundreds of millions of dollars in capital unless they saw the company as viable. The next thing he said is that they're going to convert $143 million of debt into equity, up to a total of $337 million. Now, what this means is that AMC is negotiating with creditors to trade debt for stock. Instead of AMC owing money and paying interest, these lenders become shareholders, right? And this is positive because this reduces the company's total debt by deleveraging. This is a lighter debt load that improves AMC's credit profile and lowers financial risk. This lowers their interest payments. So now cash that would have gone to service debt and to pay off loans can now be used for operations and growth. It improves the company's balance sheet, including debt to equity and liquidity ratios. And again, it shows that creditors believe that they will be repaid and that AMC's stock has massive upside potential. Because instead of taking 6, 7, 8%, 9% interest, they're taking stock now that they can convert in the future. Otherwise, they wouldn't accept shares in exchange for the cash owed. And lastly, the litigation resolution over the 7.5% senior secured notes. This would fully resolve the litigation from that AMC currently faces legal disputes with some creditors over how it refinanced a chunk of its debt in 2024. Some people might consider this to be a frivolous lawsuit, a pointless lawsuit, but the fact is that this agreement either way would end the litigation, avoiding further legal expenses, uncertainty, and distraction. So the legal clarity that occurs here is that it removes this just overhang from AMC's financial picture so that they don't have this hanging over their head, and it's nothing that they have to worry about anymore. They don't have to spend any money on attorney's fees. Spectra says, how many times do we have to say, I'm not fucking leaving, to teach this lesson? Again, investor confidence, folks. Settling these disputes reassures investors and credit rating agencies, which is, of course, extremely bullish for the company long term. So what are the broader takeaways here, folks? It's that AMC is proactively reshaping their debt. That's what we're seeing right here. And as that concerns the stock, AMC is still incredibly heavily shorted and naked shorted. We saw the fails to deliver on the most recent data provided go from 0 on June 11th, or should I say 38 on June 11th, to 418,992 failures to deliver, an increase of 418,954 in one day on only 11.1 million volume. 11.1 million volume, we saw that. That is a very large increase on the failures to deliver on AMC in just a single day. And next, I'm going to get into the GameStop FTDs as well, because those are incredibly massive. But this all boils down to the fact that a lot of people, the majority of shareholders in GameStop, AMC, and a lot of these other stocks are well aware that what has happened in 2021, 22, 23, 24, with the multiple times where these stocks have squeezed 1,500%, 1,800%, 2,000%, just in the actual stock price, not even including the options contracts, which were in the thousands and thousands of percentage points increases, in which a lot of people, including myself, made significant amounts of money. But the reality is that even though the stocks are down right now, everybody, I mean everybody who's anyone, knows that this is likely to happen again. As I stated, Bill Capuzzi, the CEO of Apex Clearing, said, do I think it's going to happen again? The answer is yes, for sure. No doubt about it. How it's going to manifest itself, I'm not sure, but for sure it's going to happen again. And keep in mind, he said this in front of the Congress House Financial Services Committee. He didn't just say this out to some news outlet or just to some random person. So what's going on here with AMC is extending their financial runway, of course, extremely bullish for the company and extremely good for retail investors in general. Let's take a sneak peek here at what's going on with GameStop's FTDs as well. Is what we're seeing here on this recent post that I put up yesterday, June 30th. This is a new record for GameStop for this year. 1.53 million failures to deliver in a single day. In a single day. That is absolutely huge. We're talking $33.9 million in total notional value of these failures to deliver that, of course, have up to T plus 35 trading days to be delivered. Now, there are ways for these market makers to kick that can, and that is unfortunate, but that's what happens when retail investors allow their trades to occur in dark pools. By using payment for order flow brokers like Robinhood and Webull and E-Trade and all these others, Charles Schwab, etc., Charles Schwab and Robinhood being the numbers 1 and 2 beneficiaries of billions of dollars from payment for order flow, your trades are routed into dark pools and internalized by the market makers, the wholesalers, who then front run your trades and create synthetic shares and issue these 1.53 million shares that don't even exist, and they can sell them short without borrowing them in order to make it so that the stock price goes down and to dilute the stock price. This would not be possible if orders were sent to lit markets using, for example, Lit Exchange. You can find Lit Exchange recently on Morningstar and Yahoo Finance, as we are now set to launch our beta in Q4 of this year. The crowdfunding campaign is nearing $1 million. You can become an investor now if you'd like, and that ends August 9th is the final day to own equity shares and receive the perks for becoming a founding investor in Lit Exchange. But back to the failures to deliver and the debt issuance here by AMC being a major announcement. Because they're increasing their cash reserves, they're reducing their total amount of debt, and they're extending their maturity timelines from debt due in 2026 all the way through 2029 and 2030. So AMC's lenders and the parties that are intimately familiar with the company's financials believe that they're going to be repaid, that the company's stock price is going to increase, and that the box office will continue recovery, which it has done, and they are in the billions and billions of dollars, and that alternative revenue streams like branded merchandise and licensing here is going to help the financial restructuring for AMC to survive and thrive in the post-scamdemic entertainment world. So this agreement is a strategic win for AMC and all shareholders. It improves liquidity, guys, reduces debt, ends litigation costs, signals confidence from lenders, and AMC is buying themselves time, flexibility, and the goodwill from their financial partners, which is all, of course, essential to long-term survival and growth, which anybody who's a shareholder is going to be happy to see. So AMC has made a major move to strengthen their balance sheet, and this could be a legitimate game changer now that they don't have to worry about debt through 2030, folks. 2030. So AMC's raising, I'm going to recap for you guys if you just got here. AMC is raising $220 million in new debt. It'll be used to refinance debt that's due in 2026. This will push their obligations further out and give the company more breathing room. It's going to swap debt for equity. They're converting $143 million of debt into equity now, with a path to convert up to $337 million total. That means less debt, fewer interest payments, and a cleaner balance sheet. A move called deleveraging. This will also resolve their lawsuit. AMC had an ongoing litigation with some of their lenders over past refinancing deals. That lawsuit will be fully resolved as part of this agreement and removing all legal uncertainty and legal costs. Less debt, more cash, no lawsuits. Let me give this a quick like and a share if I haven't already. You know what? I'm going to repost it with a quote tweet next instead. So I'll leave it at that. This is about buying time, strengthening the financial health of the company, and positioning AMC to survive and grow. And we can see that what Bill Capuzzi said about the situations happening again with broker-dealers pulling the buy button, again going to happen, is very, very likely. Especially when out of nowhere you go from having no failures to deliver to 250,000 to 500,000, just like out of nowhere in failures to deliver on AMC stock. And the same thing with GameStop. They're going from 0 FTDs to 86 the next day to 1.5 million the following day. This is something that will continue to happen over and over again on these stocks until something breaks. And eventually something will break. But we're not going to wait for something to break to make real changes, folks. You can actually help your financial position when Lit Exchange launches by automatically routing your orders to lit markets. Instead of allowing market makers like Citadel and Virtue to buy your orders from Charles Schwab and Robinhood and all these other payment for order flow fucking brokers and prevent them from front running your trades, prevent them from creating synthetic shares, prevent them from failing to deliver on the shares that they're sending you, simply by ordering from lit markets. So keep an eye on that. You guys can invest on that now, but it's not something that's going to be open for long. And in addition, in case you were unaware, the FHFA, the U.S. Federal Housing Authority, Fannie Mae, Freddie Mac, the ones who issue FHA loans and VA loans, is now going to be accepting cryptocurrencies when you buy a house. So in case you're unaware, if you're buying a house and you have crypto, that doesn't count towards your balance sheet. And up until now, up until recently here, you would have had to sell all of your Bitcoin, all of your ETH, all of your Doge, whatever, in order to have sufficient liquidity to buy that house. So with Lit Exchange, working together with the United States Federal Housing Authority, the FHFA, you would be able to use your cryptocurrency on your balance sheet to help you qualify for your mortgage to buy your house, including investment properties. If you're doing DSCR loans, for example, and other things like that, your cryptocurrency would not have to be liquidated. You would not have to take losses or incur capital gains taxes. You could simply hold on to your cryptocurrency, apply for your mortgage using your Lit Exchange stock and crypto brokerage accounts, and then qualify for the mortgage without having to incur realized losses or without having to incur realized capital gains. So, Bill Pulte, the director of the FHFA, said that after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. It is so ordered, effective June 25th of 2025, effective immediately, and should be implemented as soon as reasonably practical. And of course, he says, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside the stock and bond markets, and cryptocurrency has not typically been considered in the mortgage risk assessment process for mortgage loans delivered to the enterprises without converting the cryptocurrency to the US dollars prior to closing. The US FHA has now determined that the consideration of additional borrower assets in the enterprise's single-family mortgage loan risk assessments may enable the enterprises to assess the full spectrum of asset information available for reserves and to facilitate sustainable home ownership to credit-worthy borrowers. In English, this means that you don't have to incur realized losses on your crypto and you don't have to pay realized capital gains taxes on your crypto in order to buy either a home or an investment property. So, of course, this is incredibly bullish for retail investors, especially if they hold their stock in cryptos in the upcoming stock and crypto brokerage once it launches for full access in 2026, Lit Exchange. Again, you can check us out on Morningstar and on Yahoo Finance, amongst others. Bilbo says, boss, it sounds like you and your team are building a super brokerage. That is awesome. Very excited to watch this happen. Cheers, my friend. Yeah, we're very excited about it as well. And it's something that's absolutely been a long time coming. We've been working on this since 2021 when we realized that none of these other brokerages are doing anything to help retail investors whatsoever. And we're going to have to do it if we want it to be done.
Bro, what happened?
Yeah, it does sound great, AMC. You're absolutely right. Especially for people that are holding cryptocurrency, it's going to be huge.
Bro, what happened? I was rich, but then my brokerage restricted trading and I lost it all.
It's time for change. Lit Exchange. No dark pools, no restrictions, no bullshit.
No dark pools, no restrictions, no bullshit. And Everlong, to answer your question, will there be the ability to transfer shares from other brokers to Lit Exchange? Of course there will, my friend. Absolutely. You'll be able to transfer in your shares and cryptocurrencies from other brokerage firms without a problem. So, folks, I think that's enough for today. Let's do another stream tomorrow, because undoubtedly there will be more to talk about. And I will fill you in, guys, further then. Have a wonderful rest of your day. Let me see if there's any questions real quick. I don't see any popping up just at this very moment. And oh, that's right. Red Command says Old Yeller, talking about Janet Yellen, said that it would happen again also. That is very, very true. We are seeing some major increases in failures to deliver on companies like NWBO, GNS, Finger, GameStop, AMC, a lot of heavily shorted equities without question, including silver, ETFs, and such. Thank you, Lady Kim, Giles, and Typo, Wolfie, Mama Bear. Appreciate you guys. And huge shout out to all the founding investors and founding members of Lit Exchange. Let me take a quick peek and see how we're doing so far. Last we checked, there was about 789,000 raised. Looks like so far the company has raised over $839,000 from retail investors. And this will end on August 9th of 2025. So if you want to get in, you can go ahead and pledge, subscribe, and fund your account to become an owner, a retail investor, a founding member, and receive a plethora of perks in Lit Exchange. Cheers, folks. Thoughts on Paul Atkins? Paul Atkins, my friend, he just started. You know what I mean? Paul Atkins just became the head of the Securities Exchange Commission just a few months ago. These things take time, my friend. He's going to make things easier for retail to invest in cryptocurrency. Let's see what he does about naked shorting. There's a long way to go. There's still over 3.5 years. Trump's not even half a year into his term yet. There's still 3.5 years of the Trump administration. And I'm very much looking forward to Paul Atkins making some serious changes over at the Securities Exchange Commission. I'm looking forward to Bill Pulte making changes at the Federal Housing Finance Administration. And as well as... I hear my little one's calling me. Sorry, I'm getting a little distracted there. My little one needs me, folks. I gotta go. I will see you tomorrow. Charles, thank you as well. Giles, Beast Mode, Eagle Eye. Don't worry, check the video out if you haven't seen it. Just go back. It's a quickie. Gotta go, folks. Have a great rest of your day.